Hey guys, welcome to my YouTube channel. It's Amphyfx here. Today I'm going to be talking about fair value gap, FVG, what they are and how you can trade them and the strategies you need to know or how to apply it in your trading strategy. So guys, please don't forget to like and subscribe. Let's dive in. So what is FVG or fair value gap? Now it is the gap between an impulsive candlestick, the gap between two adjacent candlesticks that is close to what? An impulsive candlestick. So if you have two candlesticks, let's say you have a big candlestick that make a big move, and then the two adjacent candlesticks that are close to it, the gap between it is what we call a fair value gap. I'll be showing you guys on the live charts how you can identify it. So what is an impulsive candlestick? An impulsive candlestick is the candlestick that makes a big move, most of the time creating an imbalance or gap around it. Now, these impulsive candlesticks, if you look around that area, is where you'll be looking for what? That's where you'll be seeing your what? Your FEG or your fair value gap. Now, fair value gap mostly is the gap that is just like an imbalance. Price created a gap around that area, and most of the time, in fact, almost all the time, price come back to that zone to fill that gap and begin to what? And begin to go towards the intended direction. Now, let's go to a live chart and I'll show you how you can identify what your fair value gap and the strategy you can use to trade it. So guys, now let's see. Now this is a live chart, right? This is a live chart. So we have to identify what? A huge gap. Let's say a huge candlestick movement. A huge candlestick movement. Like for example, you can see this one here is a big candlestick movement, right? So that's an impulsive candlestick. And what do you see? We have this red candle here and this red candle here. So I said the two adjacent candlesticks between, you can see this is a big candlestick move. Now this is an adjacent candlestick and the next one is the adjacent. You can see there is a gap between that zone, right? So this gap you are seeing here is what we call a fair value gap. This is what we call a fair value gap. And what do you see price did? Price came, tested it, filled the gap, right? You can see, tested it, filled the gap, and begin to what? Sell. So now you need to know market structure. You need to know market structure before you can apply the concept of fair value gap. Market structure. Now, if you observe this market, are we in a downtrend or an uptrend? So the market is kind of choppy right now, but to me, I'll think we should be in a downtrend. We're kind of, the market is choppy. Let's look for a clear market. All right, let's say this one here. This market obviously is trending upward, so it's making series of higher highs, higher lows, higher highs. Now let's look for an impulsive candlestick. You can see an impulsive candlestick is this one here, this green candle. Now the adjacent two candlesticks next to it is this one, this red one, and this green one, right? So you can see there is a gap between that tiny gap you're seeing. And what do you see price did? Price came, tap into this, fill that gap, and begin to what? And begin to buy, right? Because the market is trending upward. Now you can see price has tested that zone and is beginning to buy. What do you do when price come back to the FVG? You set your limits, your buy limits or your sell limits, whatever you're doing. Look for confirmation, set the entry, then set your stop loss just below that fair value gap, then set your target to whatever level you want. You can see the fair value gap strategy is very good and works most of the time, like 99% of the time. You can see that's one. Now let's look for another fair value gap. Now this market structure here is an uptrend. Now let's look for a big move. Now here's a big move. Here is also a big move. Now let's identify our fair value gaps. The candlesticks adjacent to those fair value gap. The candlesticks, that's, you can see this adjacent candlestick here and this adjacent one. Now the gap between the big candlestick is what we call a fair value gap. Now if you observe this fair value gap, market came back, tap into it, and begin to buy, right? This gap here you're seeing is what we call a fair value gap. What you do is you set your limit, either buy or just below the fair value gap. Then what? Take your entry. You can see, take your entry. Then set your target and your stop loss. Just set your stop loss just below the fair value gap and see how the market moves. Let's look for another example. You need a clear market structure, just as I said. Now you need a clear market structure, and you need to see an impulsive candlestick before the FVG strategy is gonna work. You need to have what? One, I said you need to make sure your market structure is correct, and then two, you need to have an impulsive candlestick. Then mark out your FVG. The two candlesticks adjacent to that impulsive candlestick is what we call the fair value gap. Just mark it out, set your limit, and then set your stop loss just below that just below the FVG, and then set your entry and your target. So guys, it's Amphyfx. Don't forget to like, subscribe, leave a comment on which topic you want me to talk more about. See you in my next video. And if you want to join my free Telegram channel where I drop my analysis, my signals and setups, you can see the link in the description down in the description of this video. Don't forget to join us. It's for free. You don't have to pay anything. It's for free. So come and trade with us, guys. See you in my next video. Thank you for watching. Don't forget to like and subscribe. Thank you. Peace out.